Londra'dan herkese merhaba. Bu bölümde piyasalara özel bir parantez açalım. Değerli bir yayın konuğumuz var. Simon Quijano Evans'la buluşuyoruz. Kendisi Makro Hive'ın Kıdemli Gelişen Piyasalar Stratejisti. Hi Simon, welcome to our show.
Morning.
Actually, let's talk the big picture first. We have reached the halfway point of what has been actually an extraordinary year. If you had to write the global economy's mid-year report, who would you describe as the winner or the loser?
Well, I think the clear winners are those who've been invested in equities. I think the losers in inverted commas, well, it's the consumer, which means all of us, essentially, given that we've been faced with higher oil prices, higher petrol prices, actually higher food prices. But one must say that this time round is very different to 2022 when Russia invaded Ukraine. At that time, oil and food prices jumped much more in between January and June than they did this time. This time we're up about 5% till the end of June in oil prices and up about 3% in food prices, in global food prices. So there is definitely a big difference.
So in terms of countries and regions, who do you think ultimately paid the highest price? Because they're always talking about Europe paying the highest economic price of this recent energy shock, especially. And do you agree? And if it is so, has this changed your medium-term outlook for Euro area?
So I think we in Europe tend to be very spoiled and always focus on ourselves in Europe and the way that everything hits us. But the fact is that a lot of countries out there, especially in emerging markets, have to deal with a lot of more impulses and worse spillover, whether it's an increase in inflation due to FX depreciation coupled with higher oil prices or food prices. But this time round, I think what we've seen is that because central banks in emerging markets have been so proactive in many cases, that the effect on emerging markets has been lessened. And you can see this in the FX, in the outperformance of foreign exchange rates or currencies in emerging markets compared to their developed market counterparties. I mean, if you look at total returns in places like Turkey, or Colombia, for example, or Hungary, then the currencies' total returns, including local interest rates, have definitely outperformed the euro.
I mean, in terms of euro-dollar parity, I was trying to ask, actually, do you expect continued dollar strength? Is there finally room for euro to recover?
I think it's a very difficult question and very much depends on how long this situation in the Middle East continues. So if we have higher oil prices for longer, then the likes of the Fed will have to step in and move on the rates, in other words, on the upside. And I think this is going to keep markets second guessing what the Fed is doing with the new Fed governor, with the inflation dynamics that we've seen in the United States. In the Eurozone, it seems clearer. And let's face it, compared to back in 2022-23, the ECB was behind the curve, if you like, compared to the Fed. So I think we definitely want to see it one step ahead, which would be euro supported versus the dollar. But it all really depends on what the Fed does in the next 3 to 6 months.
Markets have actually spent much of this year constantly repricing, right? Central bank expectations. Now, looking ahead, which central bank do you think has the most difficult job? Federal Reserve, ECB, Bank of England, even Turkey Central Bank? What do you say?
Look, I remember somebody, I can't remember who it was, one of the governors saying that, you know, being a central bank governor is one of the loneliest jobs in the world because you can't speak to anybody else about this, except for maybe some of your central bank colleagues elsewhere. So I think it is definitely a difficult task for every central bank governor and board members. They're not only having to deal with this inflation up and down, due to geopolitics, but they're also having to deal with domestic politics. And I think the pressure from domestic politics has been something that central banks have actually been able to master in a way. And looking forward, especially with the Fed, it's going to be very interesting to see what the dynamics are on that front. So I think I'm not too concerned about the ECB, Bank of England, or Fed. They'll do their job properly. What I think is going to be the biggest challenge is for central banks like in Turkey or, for example, in Brazil, whether they keep the high forward-looking real interest rates how this affects growth in their countries, and how it affects the exchange rate dynamics too.
So emerging markets have actually, some say that, proven remarkably resilient despite this higher oil prices and tighter financial conditions. Do you agree? And where do you currently see the biggest opportunity and biggest vulnerability in the emerging markets?
No, I fully agree with that. And I think it took a lot of people by surprise. But as I mentioned before, I think this is the proactive stance of many central banks in emerging markets. They've learned so many lessons from the last 10, 15, 20 years. And ultimately, the main driver is not going to be maybe oil prices, but it is going to be US Fed policy. And this was the case 30 years ago. I remember when I was writing my PhD thesis. It is the case today. US monetary policy is the main driver. So if you are proactive as an emerging market central bank, and you've hiked rates before, and you made sure that your policy is in line to take care of these things, then you're going to be successful. To your second question as to which countries could outperform, I think, look, if we see a calming in the Middle East, I think we can see the likes of Turkey outperforming. We could see some sort of recovery maybe in the Polish zloty. If we look ahead in the next few months, we can see Asian currencies starting to perform better. So there's a big mix, and there are so many opportunities in emerging markets. It's a huge space. And if you're diversified in EM and you have a portfolio in EM, you can reduce that total risk.
Simon, turning to specifically Turkey, do you think rate cuts are back on the table? Or let me put it this way, what are your expectations for central bank over the coming months? And what are the key conditions actually that need to be met during this period?
So I think the first thing one must reiterate is that the policymakers in Turkey have been extraordinary. And they've been doing an amazing job dealing with the negative spillover from the Middle East. And this goes for the finance minister, this goes for the central bank governor, all the policymakers and decision makers in Turkey. That's the first thing. The second thing is looking ahead, obviously all very much depends on what happens with oil prices, given that Turkey is a very large net energy importer, as we all know. There is definitely a support from the summer months, given all the tourism receipts that are coming in. I think that the first thing that the central bank can do is to reduce the effective effective rate of funding, which as you know, is at about 40% now at the overnight lending rates. So reduce that over the next 1 to 2 to 3 months, and then we can start to look into rate cuts in the second half of this year. Well, we're already in the second half in the fourth quarter of this year. Again, this all very much depends on oil price dynamics.
So we have to we have to watch very closely the oil prices. So Turkey continues to offer one of the world's highest carry rates. But again, some say that the lira has also appreciated significantly in real terms. How sustainable is the current policy mix? And how do you think the international investors view Turkey today compared with a year ago, for example?
Well, look, I mean, central bank FX reserves have been stable and they've been able to be built up, especially when we saw a stop to the tension in the Middle East. I think that these dynamics could continue, which is very good news. I think that foreign investors remain interested in Turkey, and they will remain interested in Turkey and the local currency as long as there's no political noise and as long as the policymakers are allowed to continue with their amazing job that they're doing. Is it definitely something that remains for the next couple of years? And it's up to markets and investors to decide if this has been priced in. We could still have a lot more. I personally have been able to build my own blog, if you like, website with using ChatGPT and using Python. And I've never been coding before. So it just shows you the potential of all the AI out there. And I think many businesses have not used this potential yet. So this is definitely going to be something very interesting. And it's also going to be a challenge for the labor market as well, everywhere. So I think that's definitely something to focus on. Otherwise, geopolitics, markets get used to geopolitics, and they will deal with it as we move ahead.
Okay. Last but not least, if global investors could focus on just one indicator during the second half, what would it be?
I think it's oil prices. Oil prices is definitely a big indicator to focus on. Yeah, that to me is the main indicator, and as a result, a second derivative, inflation.
Simon, Quijano, Evans, thanks for joining our program.
Thank you.